The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy New Year's Eve. We got a full day of trading today in the markets. Expect things to trail off a bit. We'll see. We got a little bit of volatility in the overnight session. Right now, you got the S&Ps positive by 4 points, but you are a solid 25 points off the lows right now. We got jobless claims out this morning. We'll get into that. We have metals pulling back as well. Indices slightly in the green after trading lower overnight. NASDAQ 100 up by 29 points as markets looks to finish off a gangbuster year. And we'll go over some of those numbers. We'll take a look. For 2025, Dow up by 5 points right now. And you get the Russell up by 2. Bitcoin pushing near 90,000. You're up by $1,200. 89,460. Crude up 35 pennies at 58.30. And as I mentioned, metals, a little volatility to the downside. How about that volatility just at about 1 a.m. Eastern time? Now, on the air yesterday. Yeah, so these are 5-minute bars. This is around the close of action yesterday. You actually peaked out on gold. Yeah, remarkable. 8 o'clock in the morning yesterday. Things looking pretty rosy. Had to calibrate my brain. My goodness, you're talking about $140 from high to low last night. And then we're up another $70. Anytime you're trading with this volatility, folks, this type of volatility where you're talking about in 24-hour period, right? You get a bounce, you get the acceleration, you get $140 lower. We're bouncing again today. Nonetheless, gold's off by $35. We'll talk about some of the volume later in the program with metals. Silver right now, right back to the lows of yesterday. Silver's off $6.34. You do the same thing in terms of where silver was. Now, silver made it higher intraday yesterday. 1 o'clock p.m. was the high of about $78. Silver just trades down $8 almost. You hit a low of 71.08. 70.22. So almost $8 full dollars to the downside. This volatility ain't over in metals, folks. Okay, was very surprised to see the actual bounce you got yesterday. Saying, man, it seems like an exhaustive high on these markets, and man, we got some selling. Okay, and what do? You trade higher on lighter volume. You accelerate lower with volume. You bounce on lighter volume. We'll see how today comes in. Probably going to be a light day, New Year's Eve. Markets, as I mentioned, open a full day. But many participants going to be getting out of there if they can. Now, platinum. Okay, platinum is the strongest on the way up, and you're actually the weakest on the way down. And that's how it goes sometimes when the bubble bursts. And this is not a dire bubble, folks, okay? This is just the parabolic nature when things go parabolic. You got platinum trading from 1,500 up to 2,600 in the span of a month. And just like that, we're back to 1,900. Okay, 1927 was the low. You take a look at the volume on platinum, even more pronounced than silver. Okay, you talk about an engulfing. You engulf practically almost the full week prior, and now you're trading lower. And yeah, you're going to do it on volume. You're going to take out this low, which was 42,000 contracts on the bounce yesterday on platinum. So it's been a heck of a run, folks. And one of the things working against traders right now is it's been almost a 2-year run. This run, now silver really had its year this year. Okay, but gold, it started February of 2024, folks. It's been a one-way trip. Silver really ratcheted up. I mean, you could say just even in the last month, right? But yeah, from the lows of April, about $30. You back up to gold right now. Okay, it's a 2-year run. The only pullbacks we had in gold was one, not even plural. The only pullback, single pullback. Now, yeah, you can argue there were a few weeks of negative action in April. Okay, but remember what the market was doing. That was not negative action. You felt like you were holding up well if you were in metals when markets were cascading lower as metals actually traded higher. And basically, you just had a couple consolidations, late 2024, and then you had a nice 5-6 month consolidation in 2025 before you ratchet higher. And this is the volume. You got a high out here of 43.92 with almost 2 million contracts the week of October 13th, folks. Okay? We'll see how we come into that area. We're trading right now at 43.52, just below those highs. You jump over to silver on a weekly. And yeah, as you can see, right? Silver this year versus last year. Okay? Going back again. That's a very linear trip. Right? I can draw a nice line here. Okay? Of the general trend in gold. Right? From that acceleration. You do that in silver. I mean, where do you draw the line? If you draw the line from February, okay, and any market gets overextended on the upside, on the downside, maybe that's your line on silver, maybe that's your line on silver. Okay, and that's if you're starting it in February. Now, if you want to start it in this year, this is the problem. What does this line look like? Does it go here? Does it go like that? No, it doesn't go like that. Okay? If it goes like that, then the bubble's going to burst. If it goes like that, it's overextended. Doesn't mean that you can't go higher. Doesn't mean it can't be, volatility can be a trader's best friend, folks. And man, we got some volatility in metals, so I get it. But as the saying goes, the market can go further than you think, faster than you think. Okay, and you're seeing some of it today with an 8% move in silver, and man, platinum. Off 9.2% right now on platinum. And yeah, platinum in August was trading at almost 1,200. You're still up almost 70% in platinum from where you were in August. Just trying to calibrate. Sometimes it's difficult to remember, you're trading up from 1,000 in May, right? 1,500 in July. 1,750 in October, 2,000 December 15th, and 2,500. Doesn't seem real that you can rip it all back, but it takes the stairs up and the elevator down. And on a longer-term basis, okay, 2026, I think it's going to be a good year for metals. We're getting a little bit of a bounce in the dollar today. You're up to 98.43. You pull back to 98.20. We'll talk about some of the jobs in a moment. All right, but that number, U.S. jobless claims, 199,000. Now, that's during Christmas week. You have a lot of volatility as you come into the holidays for obvious reasons, right? Christmas week, New Year's week. We have a Thursday holiday for Christmas. Markets close half a day that Wednesday. We're closed tomorrow for New Year's. You come back one day on Friday. Then you're back on the weekend. And then things really pick up the week of January 4th. But 5th. January 5th is the Monday we come back. But realistically, it's still like a holiday week easing in. Sometimes the kids ain't going back on Monday. Sometimes the kids are back in the middle of the week. January 12th, that week. Normal life. Back to reality. Now, here's what's the kicker, though. It's always fast. We get a lot of front-end loaded holidays. And what's remarkable is, okay, Martin Luther King is Monday the 19th. There's always so many holidays in the front-end loaded. And then once you get to the back end, all you really get is Thanksgiving and Christmas once you cross. But yeah, so we are going to be back for the week of January 5th is a full week. January 12th is a full week. And then we have a shortened 4-day week again. So imagine that. We have Christmas week is 3.5 trading days. New Year's week is 4 trading days. We get 2 full weeks, and then we get another 4-week trading day after that. But that's the number. Initial claims decreasing. Now what I'll say is, Christmas week, it's a volatile week for data. And we got markets climbing on that data. S&P's up by 4. Stay tuned, folks. It's New Year's Eve. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We get S&Ps positive by 4 right now. All the markets slightly in the green. We jump around to some of the leading equities. Quite a year for NVIDIA. NVIDIA going to be up almost $2. That's $50 billion in market cap. 25 billion shares. This equity. Now I generalize. I think it's 24.3 billion shares outstanding. Market cap 4.61 trillion for NVIDIA. And you're up by about $2. We'll take a look at the daily on NVIDIA. Nice sign of strength, December 19th. We had some selling following their earnings. Remember, they were gangbuster earnings. On November 19th, you got some selling coming back, but NVIDIA finishing the year out, 4.6 trillion. Microsoft, quite a year for them as well. You're going to be slightly in the green this morning. And yeah, that was some selling on Microsoft. Now that's options expiration, okay? That's triple witching options expiration. You get some huge volume on a lot of equities, gold equity, many equities. And that's what that is. You're going to see that on the chart. That's where we say, where does that volume come from? Options expiration. And actually, if you go in, what's cool is, where does all that volume come from? Volume on the close on options expiration. So remember that when you see those option numbers. Doesn't mean it's not real. It's real. Okay, and you got a lot of triple witching. But that's the reason for it, and it does factor in. All right, so looking at the data we get this morning, New Year's Eve, jobless claims under 200,000. And as I mentioned, though, Christmas week, man, you know, hopefully, who's getting laid off on Christmas week if you don't have to? When things happen on businesses, man, it doesn't mean you have to tank a business because you can't hire someone on fire somebody on Christmas week or lay them off. But obviously, you're either probably doing that before. I say obviously, hopefully, right? You're doing that either before the holidays or after the holidays and not Christmas week. But figures have been volatile recently, typical of this time of the year. I mean, this is real life. It's how it plays out. You know, people getting laid off. It's bosses, it's owners, bad decisions. They got to happen sometimes, of course. But obviously, when you come during the holidays, there's all these, variables that come into play. Initial claims decreasing, though, nonetheless, 199,000. That was lower than all estimates, and one of just a handful of readings below 200,000 since early 2024. Let's see, continuing claims, which were a week delayed, 1.87 million. So we dip lower a bit from 1.91 to 1.87 million. Not bad. So a drop of 40,000 on a continuing basis, but nonetheless, you're talking about Christmas week, and you're talking about the week prior. An imperfect seasonal adjustment process suppressed the headline figure. Looking ahead, we think weak hiring will keep the Fed accommodative in 2026. That's just one man's take, okay? But the holiday season, you can imagine, particularly volatile. Jump over to Google. Big year for Google as well. They were underperforming on AI, and Gemini just takes off from 150 on the April lows, even lower, 142 to 328 Google. Look at this volume on Google. Okay, you got a nice sign of strength the week of November 17th. You close it out at 299.65. That's a nice area of strength. You're above that area on slightly lower volume, but you put this thing on a monthly. That's strong, sustained volume all the way. It is, a little bit of a drop off, but imagine the volume that Google had coming out of the April lows that many equities didn't. You almost kept up, right? We had more volume this year than almost every month last year. And technically a little bit lighter, but just strong numbers, man. And yeah, Google Gemini actually taken over. Microsoft and their investments in OpenAI potentially going public late next year. Going to be an interesting saga as they push a high valuation, to put it lightly. Jump over to some of the other stocks. Oracle shares, quite the acceleration in the pullback this year, up to $345 on their earnings in September. That acceleration fueled by that $300 billion deal with OpenAI. And already there's some backlogs in some of their development of their AI centers, pushing back the potential start dates. Yeah, and this 200 area, kind of a critical area. You're right in this bar from December 2024 on their earnings. You're right in this bar where we have a high of 191.91 from January, just looking at areas of strength potentially. And you're approaching, you're right in the middle of this big bar when things really start to ratchet up from June. But you trade below this 200 area, I mean, it's really 150 and 100. Nice round numbers. Our man Basil Chapman, why not? We focus on yields. So I've been talking about this comparison for a while in terms of the 10-year, the 2-year, the Fed. We get 8 meetings a year, folks. Chairman Powell, he's out in May. He's got 3 meetings left in 2026. Okay, the next Fed chair, whoever that is, they're going to get 5 meetings next year. Their first meeting, June 17th. There's actually no May meeting this year, okay? Next year, 2026. The Fed meets 8 times. They meet every 6 weeks approximately, okay? So not monthly, every 6 weeks. Their next meeting is January 28th. Right now, the market thinks that they're going to stay where they are. 85% probability that we stay at 3.5 to 3.75 for the current target range. You go out to March, market still thinks they're going to stay put at 52%, but a big number, 42.5, that we get 25 basis points of cuts. You go out to April, and finally the scale tilts a bit, but still almost a 50-50 with a bias towards cutting. So right now the market's expecting that the odds that we get one more cut from Powell, maybe 50-50. We'll see how the data goes, of course, right? You go out to June, no. Then the market's saying, by the time we get a new Fed chair, the question right now is whether we have 1 or 2 cuts by then. If Powell goes no cuts, I mean, there's still a 20% chance that we have no cuts by June. Okay, I think there's a lot of room for rates on a 2-year basis, at least, to go down. Because let's put it this way. If Powell goes 3 meetings with no cut and the next Fed chair comes in and he stays put, or she, we don't know, but it seems like all the Kevins are lining up and some others, what does the economy look like, okay, in terms of inflation, if we can't get a cut with 3 meetings with Powell and 1 meeting with the next Fed chair? Well, right now the market's pricing in almost a 1 out of 5 chance. I don't think that's going to play out, okay? They're worried about the jobs, and over the next 3 or 4 meetings, by the time we get a new Fed chair, I think right now from a risk-reward perspective, you're going to see pressure on rates to be lower, and that's going to keep pressure on the dollar. Okay, the dollar, a little bit of a bid recently, bouncing from that 98 area. A week ago, we're at 97.75. We're at 98.34. But on a longer-term basis, okay, and I say longer-term, over the next year, when you go to a new Fed chair, it's quite a cycle transitioning to a new Fed chair, especially in the context of the pressure for rates lower. We'll come back, folks. We'll talk some yields.
Sharpening
New Year's
your
Eve, don't go away.
skills as
Stay
an
tuned.
investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open for the final trading day of 2025. Now, you're probably not going to have a lot of loss harvesting when it comes to taxes because of the year that you've had. But take a moment and I'm no tax accountant, folks. Go seek out a professional, okay? But there are many things that, if you're trading in a regular stock trading account, are you looking at those year-end gains, losses? Many times, you got equities in your portfolio, right? You're closed out winners. Maybe you wait until the first to close it out so you don't have to pay taxes until 2026. But the other side of that is, if you have losses in the year and you have gains, you can always close out those losses today, right? You record those losses against gains this year if you have them, and then you have to wait a certain period of time so it's not a wash sale. I think it's 30 days, but again, consult a professional, okay? And in taxes, you really want to get buttoned up. The smallest thing, the smallest error can mean everything, which is why you really want to pursue a professional. I'll give you my take on the charts, folks, and I stand behind it, but I'm not going to give you tax laws. But it's the last day of the year, and there is a lot of stuff you can do to minimize that number, even as simple as you look on the books, you say, man, I got a couple equities that have really underperformed. Now, your risk there, right, is that you sell it, you take the loss, you offset the win that maybe you closed out this year as well. And then the stock goes up, right? You have an opportunity cost. You want to be in that equity. It's been down a lot. You don't want to sell it. You sell it to take the loss, to harvest the loss, to offset a gain, and potentially you miss an acceleration. But for those of you thinking, man, I got winners in this market right now, right? I just want to wait to get into 2026. In many instances, you can look at the entirety of your portfolio and you can say to yourself, okay, guess what? I don't need to wait. I can close out these winners. I can offset it by closing out a couple losing trades. I consolidate the portfolio. And so take a look at some of that because it is an opportunity. And a lot of times people just say, I'm not worried, and they don't really meticulously go after those tax savings. And there's a lot you can do. There's no reason to, because think about it, right? If you got equities that got hammered this year and you're not inclined to keep them, right? Or you're just saying, you know what, it's okay if I'm out of them for 30 days. You can close out that position, take that loss, and it offsets the gains. So take a look at that portfolio today as we wrap up 2025. We jump over to metals. So that's your weekly. Now, as I mentioned, you did that all basically in engulfing right out of the gate on Monday. And on a weekly basis, we're going to get some volume. It's not going to compare to what we did in October, though. That was a magnificent run up to those highs. That's where the real strength was in gold. Okay, October 13th up to a high of 43.92. We're just below that area right now. Now, it's going to be interesting to see if this area turns into support. Okay, because what you did not want is this area breaking down because it's going to be very difficult to break above this area with this type of acceleration in volume. We're going to have some dollar weakness, okay? That's my opinion. But the dollar is going to face some weakness, man. It is a battle out there, and we are going to be dropping yields. And that is going to make the dollar less attractive. Now, it's a global competition basis, so it matters what other central banks are doing, of course, but the pressure is going to be on. You jump over to silver, and as you can see, not quite as bearish, right? You look at silver, you had this one big month, but silver had real volume in December. And silver has not engulfed last week at all, right? You're just in the middle of it. Now, you're going to do some volume, though, this week on silver. It's only Wednesday. And we've done 501,000 contracts. That's because Monday was a historic day where you did 250,000 contracts and you did engulf the prior day, which was, again, a mammoth day. So on a daily, you engulf it, but on a weekly, you don't. And on a monthly, all right, check out the monthly. Yeah, we've pulled back, but look at the monthly. All right, so longer term, silver still looks great. You jump over to platinum on a monthly, quite a give back. But yeah, you're talking about breaking higher with volume. We're not going to do it. Remarkable. Look at this. On a monthly basis, platinum's not going to have the most volume of the year. Well, we'll see. We got one day left, but that was 990. We'll see. Last day of the month, you can get some volume on the close. We need about 60,000 contracts. Yeah, that's not going to happen. We've already done 31, but we'll see. You may get some volume on the close, nonetheless. And then you look at gold. It looks a lot more orderly in gold than it does in silver and platinum, folks, okay? Silver and platinum look a lot more parabolic than gold does, and that's kind of the example I was going through with the trend lines earlier in the program, and you can really see how these could be sustained on a monthly basis. but very difficult to see how the silver and the platinum runs get sustained when you put it like that, right? I mean, these runs get sustained. We're going to have platinum at 5,000 and silver at 500. All right, back to a short-term time frame on a daily basis. Platinum off about $200 right now. You got gold down by $28, well off the lows. Yeah, 42.84, and we're good $75 off those lows on gold right now. Take a look at some of the ETFs. Nugget right now up about 35 pennies. On the flip side of that, jump over to Dust down about 0.4%. Jump over the XAU, the miners down $1 right now. Now these things. You know, you start accelerating over the 1 to 2.618 expansion, folks. It's quite an acceleration. And many times that's where at least you need a consolidation. Okay? And how about the timing of the pullback, the beginning of the year? That was a heck of a run, folks. Okay, this is the XAU. You went from 100 to 175 last year. You pulled back, and then you do 2.618% of that move. It's mammoth. And that area is 325, which is also where you spiked to where? In October. And remember, that's where you had all the volume, okay, in the metal. You know, you want a chart on quality volume, folks? That's the chart of quality volume on the way up. And this was a nice pullback on lighter volume, okay? But this is a problem. Accelerating over this area on lighter volume is not how time of the trade price and volume works. So I encourage you to keep your spikes up, okay? Longer term, the winds at our back in metal. But we're talking about the last 2.5 months of the year, a continual sliding of lower volume there on that gold contract. Not the same on silver. Not even close, right? You get the pullback on lighter volume, and then you ratchet up again on silver. You jump over to platinum. Same. Not the same. As in, you do have some great volume. But on gold, man, that October high, the volume was everything. And it correlates to exactly where the XAU went, up to the 1 to 2.618 Fibonacci expansion, and the HUI is the same thing. You touch that 1 to 2.618, and that area is about $680 on the HUI, and about 327 on the XAU. All right, we jump over to copper. All these metals, man. Look at that pullback on Monday, and then you get a bounce on very light volume. Now, that tariff volatility back in July, you got it all back and then some. I mean, pretty remarkable, right? The high from July is 583. We hit 593, 592, within 9 pennies of that high. After running, what, percentage-wise? You're talking about a run of almost 40%. All right, folks, stay tuned. We're coming back. We'll look at some equities that are moving. Markets moving to the red. New Year's Eve, coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the market slightly in the red today. We get the S&Ps up by down by 10 points. It's 2025. I'm used to saying up. Outside of that dip that we had on the tariff pullback from February to the lows of April 7th. But yeah, it's been a heck of a run. We kick off the year at about 6,000, and we're finishing the year at almost 7,000. Quite the acceleration, 69.32. Now let's take a look at yields, okay? I've talked about this a couple times where you just back things up. This is the 10-year we're looking at right now, okay? You back things up to where we were March 20th into about beginning of May. So end of March and April, right? You had higher price, lower yield. The market had really gotten ahead of itself, thinking that the Fed was going to cut way before they had. That's your 10-year. But what's remarkable is you go to the 2-year. Okay, this is your 2-year. Keep this in mind when the pressure is going to be on the Fed, okay, because this is going to be the most interesting part, I believe, of next year. The steepening of the yield curve. This is your 2-year. Your 2-year right now is trading at about 3.45%, okay? Now, if you think about it, you don't have to do a lot of gaming out in terms of how they get this number. Well, the 2 years at about, let's just call it 3.5. It's under 3.5 right now, okay? But let's just say the 2 years at 3.5, pretty close to 3.5. Let's see where we are even to be exact. On the 2-year right now, 3.47, okay? 3.47% is the yield right now on the 2-year. Well, the overnight lending rate right now is 3.5 to 3.75%. The market expects that to go down in the near term. The risk is that it goes down. Inflation's still a problem, and they have to bring it back up. But if you just look at the projections right now, okay, the odds that they are hiking rates anytime soon, not likely, right? And so when you look at the acceleration of where this can be, okay, in terms of what's the probability that we go way higher, way lower, nonetheless, right? The 2-year right now is basically right in line with where the Fed's expected to be in the next 6-9 months, okay? And that is higher price and actually lower than where we were in March of 2023. And to put things in perspective, okay, this is your 2-year yield. And this is the area in March of 2023 when the market really got ahead of itself and we thought the Fed was going to cut. Well, the 2-year yield at that time was at 3.77%. Okay, well, the market got it magnificently wrong. You went all the way back up to over 5.2% on a 2-year, right? You were back up at 5% in April of last year, and now we're at lower yield of 3.47, as I mentioned. Okay, 3.47 is where we are right now on the 2-year. Now you jump over the 10-year, because that's what matters. Okay, the 2-year is the Fed overnight lending rate, and yeah, it matters. Of course it does. All right, but when you're talking about mortgages, which is really in focus, especially as a builder, real estate professional myself, the 10-year is what matters, right? And if you go back it up to the 10-year of where we were in that March acceleration, okay, we were all the way at 117. We're pushing 112.5. We're 4.5 points below where we were right then. So even as the Fed is expected to cut, especially compared to where we were at that time, all right, now you got the 10-year pushing 4.14%. And if you back that one up, just in terms of watch this. Okay. Back then, we were at 3.38% on the 10-year. My goodness, right? So at the same time, over the last 2.5 years, from March of 2023, the 2-year has come down about 40 basis points, and the 10-year has gone up almost 75 basis points. You hear that again? Since March of 2023, the 2-year has come down 30 or 40 basis points, and I'm talking about cherry picking lows here, and the 10-year has gone up by 75 basis points. So over that period of time, the 10-year is going up 75 basis points. At the same time, the short-time lending has gotten cheaper. Why is that? Because long-term lending is not cheap right now. Okay, we got an expanding deficit and debt everywhere that is contributing, and that's going to be a big battle next year. But no matter what, short-term rates do influence, okay, the 10-year. And the battle's going to be on, and the Fed has some ammunition. They can come with it, man. They've done it before. You know, what's the example of an emergency? And I'll tell you that they've bought mortgage-backed securities before, folks. They can come in, and they can buy notes, okay? And if you really see a separation, and we get a new Fed chair, I think that's going to be the next battle, right? They're going to try and stimulate the 10-year versus the 2-year, and at a time that we have rapid steepening, that's going to provide tremendous volatility in the market. And the pressure is going to be on rates to be lower. But just like you see when you go over the 2-year, and we've seen these mammoth swings. I mean, look at the yield swings, right? Just look at the yield swings alone. When you look at where we went over just the period of time, like I was talking about, where not taking the COVID craziness, as in we were at an area of 0, and then all of a sudden on the 2-year, you're pushing 5%, right? But just even on the 2-year, you're talking about, and then you jump to the 10-year, okay? Pull it over again. Because I expect we're going to get a couple of these swings as well on the 10-year. And this is where you're going to get some real opportunities. In terms of, you talk about some swings, folks, you go from 3.4 to 5%, to 3.65 to 4.77, and now we're pushing 4 again. We're going to have some swings in 2026. So don't be afraid to take your stops, folks. It's been a heck of a year, metals included. All right, we're going to have plenty of trading opportunities coming up in 2026. But today, I don't think today's going to be the day. We got a VIX at 1476, a little bit of an elevated VIX with a market sell-off right now of 16 points in the S&Ps. And yeah, we got a little sell-off on the opening bell. That's your 5-minute basis. We're coming back in and testing those overnight lows with the S&Ps down 14 points right now. You take a look at the heat map. The S&P, what do we got? NVIDIA, one of the only equities positive in there, up by 0.7%. Look at this. Everything. Google, just all slightly in the red. All right, you got Walmart up 0.2%. Lilly up a bit. Verizon. AT&T up slightly. Let's take a look at those. All right, these equities catching a bid. Nah, be careful of Verizon and T-Mobile, folks. No. The competition is on. Look at those equities underperforming this year. All right, folks. One more segment. We're coming back. S&P's off by 15. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P's negative by 9 right now, and we got live programming all day, folks. So stay tuned. We got a full day in the markets, and yeah, we are closed tomorrow for New Year's Day. Listen, be safe out there, all right? You have a few cocktails, celebrate. Watch out for fireworks, number one. Okay, there's always unfortunate stories of people losing some fingers tonight. It's a reality. It's going to happen. Don't let it be you, and don't get behind the wheel after a few cocktails, man. Buy a few shares of Uber and support Uber today, and call yourself an Uber, folks. You might pay a premium fee. It'd be the best money you ever spent. Don't get behind that wheel when you've had a few cocktails. Life's too beautiful. Enjoy it. We'll see you back here on Friday in one piece. It's real, folks. All right? No messing around. It's too easy, having too much fun. New Year's Eve, there's always some sad stories. Okay, so be careful out there. Now, how about pay? We'll wrap it up. This is a good one to wrap it up with. Check out this. Now, it makes sense in terms of talent. Who are you paying talent for right now? Well, you're paying talent for AI, okay? But look at this. OpenAI is paying an average, it's their average stock-based competition is $1.5 million per employee. They have 4,000 employees, okay? I was reading the whole article. Yeah, here, okay, this is the article. More than any tech startup in history, and then compare it to some of the other companies, and I was actually floored with, this is half of the company's revenue is the 4,000 workers making $1.5 million each. Well, that's big, but you know, you look at that and you say, well, OpenAI doesn't have a tremendous amount of revenue, so of course their employees are going to be making a lot of money compared to the revenue. Google is at 15%. Stock-based compensation is 15% of their annual revenue. Palantir, $1 out of $3 of revenue goes to stock-based compensation as a share of that annual revenue. Meta, for context, is at 6%. Google, 15%. Huge numbers, but they're spending on talent. They sure are. Folks, thanks so much for tuning in, spending your New Year's Eve morning right here. Stay tuned. Basil Chapman's coming up next. Steve Rhodes at 11. Fast Market at 12. We got Larry Pesavento at 1. I'll see you at 3 o'clock, folks. Happy New Year. Have a great one.